Imagine a world where AI drives innovation across every industry, where gaming is more immersive than ever and autonomous vehicles dominate our roads. What role will Nvidia play in this world? Will it dominate this world, or will it take a backseat? In this video, we're going to be trying to find out exactly this. We're going to be looking at Nvidia stock, putting their financials into my system to see whether or not it has a strong intrinsic value currently. So who are Nvidia? For the people that don't know, this is going to be a quick brief overview. Nvidia is a multinational technology corporation which specializes in the design and manufacture of GPUs as well as other cutting-edge technologies, founded in 1993. It has a massive market cap at the moment, pushing onto $4 trillion US. It is larger than the UK or Germany at the moment, which is absolutely crazy. So is it safe to say this stock is overvalued? Well, I don't think so. We're going to be looking into this further into this video, but bear with me, we will get onto that. With their stock being up a ridiculous 2,300% in the last 5 years, with the majority of this growth being in last year of 2024, how will this perform in 2025? Can we expect this to increase year on year? So what are the future growth prospects for Nvidia? So Nvidia specialize massively in GPUs, and these GPUs are used for AI, such as generative AI, which can be used in many applications such as ChatGPT, for example. And these tools are only just expected to grow exponentially again and again for the next few years. Expansion into data centers and AI-driven technology could provide significant revenue growth as well. And of course, Nvidia's Drive platform positions it well to capitalize on advancements in self-driving technologies. Something to look out for in 2025 could be a potential partnership with an autonomous vehicle manufacturing company. This will help them boost their Drive platform further and further into 2025. However, this is speculation. This is nothing that is confirmed, but it would definitely be a step in the right direction for Nvidia. Of course, Nvidia is massive in gaming markets. Nvidia remains the leader of gaming GPUs. Despite this, gaming is actually a declining market, so it will be interesting to see whether or not this withstands through 2025. Nvidia has continued investment in high-performance computing and collaborations with cloud providers such as AWS. This is also likely to fuel growth alongside with emerging technologies. Growth in edge computing, robotics, and metaverse could provide additional revenue opportunities for Nvidia. So what are the potential risks for Nvidia this year? We have valuations concerns. Nvidia is a very pricey stock at the moment, with earnings may leading to volatility, especially if growth slows or misses expectations, in which they have expected a good Q4 report. So we are expecting that out soon. Furthermore, geopolitical issues such as US-China tensions could impact Nvidia's supply chain, access to its markets. Competition such as AMD or Nvidia are emerging in AI-focused startups. This could lead to a lack of Nvidia's dominance. And having a look at macroeconomic factors, this could prove a slowdown for the purchasing power of Nvidia, as this could be leading. Recently, we're looking at a huge slowdown in the US stock economy. However, this is due to many factors, including the fact that everything has been massively overpriced recently due to a recent bull run. So there are rumors of a recession coming. I'm going to look into this in another video, of course, but this is on a much broader scale. So to conclude that, before we look into the system, Nvidia is poised for a strong growth in 2025, supported by its leadership in AI, data centers, and emerging technologies. However, investors should watch for market valuations, competition, and macroeconomic challenges, as of course, this will all have a massive effect on an Nvidia stock price, as it is the largest stock. So with that being said, we're now going to put their finances into my system to see whether or not it is overvalued. So please do stick around for this. So looking at the exponential chart here, we can see that we are actually well below the trend line. So there is potential to catch back up to this. Maybe it is speculation, of course, and in the bear market that we're in at the moment, it's very unlikely in the near future. However, we are actually progressing in opposite ways here from the volume to price. So that is actually a bearish indicator for sure, as we are now pushing against the volume. When we look on a 91-day chart, we are seeing a relatively different story. However, we are bang on the trend line here, and we are just above it on volume. But focusing on the price, we're actually projecting this to go down in the next few days, or even 30 days, I think this is set to. So I think that is pretty bang on. I don't think we're going to see much growth in the next few days in any stock, to be honest. So personally, I don't hold any stock at the moment. I sold out about a month ago at the start of this bear market. I took my profits and I've got my liquid cash to buy at a discount at a later date. So it'll be interesting to see when that later date will be. We have a PE ratio of 54.50, a 52-week high of 152 and a low of 47, this being a difference of 105. We also have a beta rate of 1.64, which means on a volatility scale we're outperforming the Nasdaq 1.64 times, and the current price is 142. So we are pretty much we're in a good space, I would say. I say we are, like I said, I don't have any stock personally, but I think the stock is in a good space now. And now if we have a look at Graham's formula to see what the intrinsic value of this stock is, here we can see a revised and original formula. On the left here, looking at the original, we're actually pricing in a buy with the intrinsic value being set to $246 and the current price being at $142. With a margin of safety of 75%, we actually have an acceptable buy price of $184, which is well above where we currently are. So even according to the system, this stock is massively undervalued at the moment. Despite this, when we look at the revised formula, which is a more bearish formula, we can see that the intrinsic value is 129 and the acceptable buy price using the same margin of safety is $96, which prices this in at a sell. So personally, I think it's safe to say you can put this in the middle here and definitely put it at a hold. I mean, this formula on the right, the revised one, is very bearish compared to the one on the left, which can be seen as quite bullish. So it is interesting to see the contrast between them. However, looking at the intrinsic value between them both, I think it's fair to say that we're not actually massively overvalued at the moment. I would say we're pretty much bang on value. This, of course, all going back and forth in between the fact that this stock is in ETFs, so it's always going to be overvalued to an extent because people will be buying into the stock without even knowing when they put money into the S&P or the Nasdaq. So it's always going to be overvalued, but personally I think this is quite a bullish indicator. And now having a look at the Lynch ratio, we can see the result here of 0.9, which means we are just overvalued. I've seen this much worse for other stocks before, and I mean, this is a relatively strong indicator. However, it is also very bearish again. So for it to be at 0.9, again, that's pretty much where I'm putting this stock personally. I think we're pretty much fairly valued now. I don't think we're undervalued or overvalued. I think going forward will definitely be a good time to buy this stock, despite it not being undervalued. I think it's still going to have really strong growth. So let's now see what the analysts actually think about this stock. Where will this head in their opinion? So the analysts are projecting a price projection of a high of around 175 and a low of around 70. Personally, my personal opinion is we're going to see this actually, that was not what I wanted to do. We're going to see this decline in the next few, like probably 1 or 2 months, I reckon. I think especially with the slowdown of global liquidity indexes and such of the like, I think we're going to see a decline in every stock as we are just massively overvalued at the moment and we're starting to match back up with the trend lines. However, despite this, I think we are definitely going to have a strong 2025 for sure. This stock is still massive and it still has room for growth as they can only serve 1 in 15 of their customers in the market for GPUs at the moment. So if they do manage to progress on their manufacturing capabilities, I think that this stock still has much more room for growth. And of course, with the other expanding industries in which it positions itself into, I think again this just has high potential, but not massive potential. I don't think we're going to see another 2024 at all. We're not going to see stupid amounts of returns in this stock, but we're still going to see a large amount of growth. My prediction early on, obviously, with just this data, I would say in 2025 you will see about potentially a 30 to 50% return, but that is very speculative. I wouldn't base anything off of that. So looking at what the analysts project for a price target in the end of 2025, we can see it around $180, and they're actually putting a very strong buy indicator on this stock. So again, reaffirming the fact that this is projected to be a good stock for 2025, despite everything being overvalued at the moment. Again, with it being in such large ETFs, it is hard to say that you can overvalue a stock like this. When comparing it to its peers in industry, we can see here that we are massively above them in revenue growth. With revenue forecast being strong, however, despite this umbrella, the company here at the bottom is actually projected to start to catch up. People are putting a lot of speculation on AMD. I've actually done an AMD video where I analyze this stock. It will be just above my head here if you want to see that. But personally, I don't think AMD is as strong as of a stocks compared to Nvidia. So it will be interesting to watch that for sure. So is it currently a good time to buy as of recording this? Looking at the Sharpe and Sortino ratio down here, we can see it is at minus 2.88. I don't know if you can see that on your screen, but it is at minus 2.88, which is a very bearish indicator currently. Obviously, this will change by the time you're seeing this, and we are just above most of the trend lines. We're well above the 200-day and the 100-day. Despite this, looking at these 7, 30, and 50, we are actually on these trend lines. So that is it for Nvidia for this analysis. What is the final verdict? I think it is definitely a strong buy going into 2025. Personally, I won't be buying in the next couple of months as we are in a bear market at the moment. Obviously, we've just come off the back of a bull market, so we're kind of evening out, and I just want to see a bit of sideways action before I get into any sort of stock. So with that being said, this has not been financial advice, as you know. This is just for entertainment purposes only. A like and subscribe would go a long way and would be greatly appreciated. Let me know what you think about this stock in the comments down below. Will you be buying into this? Is it a buy, sell, or hold in your opinion? And I'll see you for the next video.